Good morning and welcome to our today's class. That is what we call the alternative investment analysis. Unit is on the alternative investment analysis. This is on alternative investment analysis. That is the unit. And before we begin, first I'm going to highlight the topic that we'll be able to cover on this particular unit. And then from there, we'll just be able to begin from the very first topic. So topic that we're going to cover on these units is just 9 topics. The topic number 1 will be on what we call the overview of alternative investments. Alternative investments. Now, when we talk of overview of alternative investments, we will be able to understand what we mean when we talk about alternative investments. Now, when we talk of alternative investments, we are talking about the many asset classes that fall outside the definition of stocks and bonds. Now, when we talk about the stocks and bonds, generally is what we call the traditional investments. So if you are not investing on stocks or bonds, there is an alternative of what you can be able to invest here. And the alternative of what you can be able to invest is what we'll be talking about here, where mainly types of these alternative investments, we'll be talking about what we call the real estate. We'll also be talking about what we call the private equity, what we call the hedge funds, commodities, etc. And that is what we'll call the alternative investment. Those that fall outside the definition of what we call the stocks. When I talk of stock, we are generally talking about equities and what we call the bonds. So here we'll be able to understand what we mean when we talk about the alternative investments, and we'll also be able to see how we can be able to distinguish them from what we call the traditional investments. And as I've said, when we talk of traditional investments, we are talking about the stocks and bonds. So how can we differentiate these traditional investments from the alternative investment? Is one of the very common questions where you normally ask to differentiate between the alternative investment and traditional investment. Here it can either be with regards to the return characteristics, can also talk of it with regards to the method of analysis and also other factors. That is also what we'll be able to talk about. The second topic that we'll also be able to talk about is what we call the environment of alternative investment. Environment of alternative investments. Now, when we talk of environment of alternative investments, we'll be able to talk about the participants in what we call the alternative investments. We'll be able to talk of what we call the buy side participants, the sell side participants in alternative investment analysis, and also we'll be able to talk of how in this case they can be traded on what we call the financial markets. Then number 3, I will also talk about what we call the private real estate investments. Private real estate investments. Now, mentally, this is the topic that will be introducing us to what we call the computation part. We'll be talking about what we call the private real estate. Private real estate here, we'll be talking of majorly what we call the commercial properties and also the residential properties. We'll be able to see how we can be able to value them. For example, if in this case we'll be talking about a building, how can you be able to determine the value of that building? There are three approaches that we'll be able to use here. There is what we call the income approach, can also based on what we call the cost approach, and also what we call the sales comparison approach. It's the three methods that we'll be able to talk about here. And then also we'll be able to talk about the publicly traded real estate securities. Publicly traded real estate securities. Now, when we talk about the public traded real estate securities, here we'll be talking about the rates, and we'll also be talking about what we call the REIT, the real estate, that is the real estate investment trust. And again, also, we'll also be talking about what we call this case, we normally call them the real estate. We talk of them as real estate operating what? The real estate operating companies, the real estate operating companies. This is what we'll be talking about in our case here. We'll be able to see how we can value them, how we can be able to determine the value. And majorly, one of the basic things that we normally begin with is understanding what is the advantages of investing on either of these, and also we'll also be able to see what are the investment characteristics of it, the principal risk associated with each and every part, and then also we will be able to majorly talk of some of the types of rates, like what we call the equity rates, ETC. So that is also another topic that we'll be able to talk about. The other one, we'll also be able to talk about a topic we call the private equity. Private equity. When we talk of equity here, we know we are talking about the stock. So in our case here, when we talk of private equity, we'll be majorly concerned about two things. What we call the venture capitalist, or what we call the venture capital, and what we call the mezzanines debt. In this case, we'll be able to see how we can also be able to value them. Then also, number 6, we'll also talk about the asset-backed securities, the mortgage-backed securities, mortgage-backed securities. Number 8, we'll also talk about what we call the hedge funds. By 8, we'll also be able to talk about what we call the hedge funds. So those are the main topics that we'll be able to cover on this given unit of alternative investment analysis. So for our today, we're going to begin from the introduction part, where now is on the topic we call the overview of alternative investment. Topic number 1. Topic 1 is what we call the overview of alternative investment. overview of alternative investment. So from the definition, as I've been able to say, what do we mean when we talk about alternative investment? We're talking about the many asset class that fall outside the definition of a stock or a bond. And this is where we'll be able to talk about the real estate, and majorly is also what will be concerned as we go by throughout our syllabus. The real estate, the what we call the private equity, the hedge funds, the mortgages, etc. So begin by saying this refers to the many asset class. This refers to the many asset classes. This refers to the many asset classes. It refers to many asset classes that fall outside the traditional definition, of stocks and bonds, that fall outside the traditional definition of stocks or bonds. You write and say, this category includes talk about the hedge funds, can talk of the real estate, can talk about the private equity, can talk about the commodities. Commodities generally is also what we call the structured product. Can also talk about the infrastructure. And infrastructure and other alternative investment, primarily collectibles. Write and say, you can write and say down there that managers of alternative investments portfolios, may use derivatives and leverage. And leverage, invest in illiquid assets, and short securities. Now let's talk of the characteristics of alternative investment that differentiate them from traditional investment. Characteristics of alternative investment. Characteristics of alternative investment that differentiate them from traditional investment. That differentiate them. This is from traditional investment. The characteristics of alternative investment that differentiate them from traditional investment. What now differentiates these hedge funds, real estate, private equity, commodities, infrastructure from the stocks and bonds? Number one is that for alternative investment, you say number one, they are less liquidity. They are less liquid. They are less liquid assets. They are less liquid assets. Or what we mean in this case is that for alternative investment, they have what we call less liquidity of assets held. When we compare with the traditional investment in this case, they are illiquid. That also been able to highlight up there. Number two, they need more specialization. They need more specialization by investment managers. They need more specialization. They need more specialization by investment managers. By investment managers. Number three, say they have less regulation and are transparent. They have less regulation and are transparent. Yeah, this one you cannot compare with the stocks, generally the equities and bonds. Stocks or bonds, they have more regulations compared to this one, the alternative investment that we'll be talking about. Number four, you say they are more problematic and less available. They are more problematic and less available, and have less available historical return. Less available historical return and volatility of data. They have, or you say they are more problematic and have less available historical return and volatility of data. Volatility here, we're just talking about the deviation, the standard deviation of each. Another one, they have different legal issues and tax treatment. They have different legal issues and tax treatment. Legal issues and tax treatment. So those are the characteristics of alternative investments that differentiate them from what we call the traditional investments. Now, we can now first, here we'll just be defining these categories of investment. But when we go topic by topic, we'll now be able to understand them more of what they mean. So we can begin with the first we talk of these categories of alternative investment. Categories of alternative investment. Categories of alternative investment. Now, want to now understand what do they mean? So I'll begin with the very first one, which is what we call the hedge funds. You know, the very first one, which is what we call the hedge funds. Now, for hedge funds generally, they may use what we call the leverage. When you talk about leverage, we are talking about the use of debt. So they may use what we call the leverage. They may own what we call the long or short positions. When I talk of long or short position is one of the words that we be using when we be talking about the derivative. For those that will be undertaking the derivative analysis units. Where in this case, when we talk of the long or short position, you can be able to sell or buy. When we talk about long, in this case, is when you are selling. When we talk about short, is when you are buying. Also, for the hedge funds, you can invest them in what we call the liquid assets. Sorry. Sorry. So you can invest them in what we call the illiquid assets. And majorly, one of the many different strategies in attempting to generate the investment gains, you can invest on those investment. You can invest on those the hedge funds, as we've been able to say. So you write and say, these funds can use leverage, comma. These funds can use leverage, comma. Old, long as I've said is buying, and short position, long and short position, invest in illiquid, and investment in illiquid assets. Investment in illiquid assets. And investments in illiquid assets. Right, and say, managers of hedge funds use many different strategies, use many different strategies, just write that, use many different strategies in attempting to generate investment, gains, investment gains. Right, and say, they do not necessarily hedge risk. They do not necessarily hedge risk. Now, majorly from this word hedging, which is one of the things that we talk of in what we call the derivative. Now, in the hedge in derivatives, we mean is a mechanism of reducing the investment risk. So for hedge funds, from the word itself, they do not generally mean that you are reducing risk. No. From the definition of it, as I've been able to say, as it may imply, this case is not just on what we're trying to say is not necessarily that when we start by saying that the hedge funds from the word hedge, we are minimizing risk. No, it is just an investment, which also at other cases we may say it may be more risky. We'll be able to see how. When we'll be talking about the topic itself, we call the hedge funds. Now, number two is what we call the private equity. Private equity. Yeah, just call it the private equity funds. Private equity. Now, in this case, when we talk about equity, we are talking about the ordinary shares. Now, private equity funds, you can invest them in the equity of companies, and this is the equity of companies that are publicly traded, or what we mean in this case is in public companies. So, or they can also be used in the equity of publicly traded firm that fund or the companies intend to take them private. Remember, when I talk about the private here, we are talking about now the one that is owned by individuals. So those that they are in an intention to convert them into a private companies, or those that are currently trading as private entities. That is where you can be able to invest on these private equity funds. And majorly here, as I've been able to talk about, we'll be talking about what we call the venture capital. No, the venture capital is just from what we call the venture capitalist. Those that see the business from initial stages and they may put their money on such given investment, expecting probably in future they may be part of that investment or part of the shareholders of that given company. That is what we call the venture capital. And then we'll also be able to talk about the leverages, buyouts. The leverages buyout, we are talking about the money that you now borrow. And the money that you borrow in this case is for the purposes of purchasing the equity of established companies. Is what we call the leveraged buyout. So write and say, private equity funds, private equity funds, private equity funds are investment or funds invested in the equity, 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 funds invested in the equity of companies that are not publicly traded, 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 or in the equity firms, or in the equity firms, or in the equity firms, equity firms that are intending to take private way, right? And say majorly, private equity comprises of the leveraged buyout, This is the LBO, leveraged buyout. And you say leveraged buyout, and you say these funds use borrowed money to purchase equity in established companies, borrowed money to purchase equities in established companies, and in established companies, and comprise the majority of private equity investment funds. Majority of private equity investment funds. The other one is what we call the venture capital funds. Venture capital funds. The venture capital funds, same. This is the funds invested in or used to finance young unproven companies. At various stages early in their existence. So for our purposes here on the venture capitalist, we'll also consider investing in the securities of financially distressed companies to be private. Although hedge funds they can also be part of that part of what we call the investment in venture capitalists. So we'll just be able to see that when we be talking about that particular topic. Number 3, can talk about now what we call the real estate. Right, and say this includes the residential and commercial properties, include the residential and commercial properties held in variety of structures, held in variety of such structures, held in variety of structures, including full or leveraged ownership of individual properties, full or leveraged ownership of individual properties, ownership of individual properties, ownership of individual properties, individual real estate backed loans, individual real estate backed loans, individual real estate backed loans, backed loan, private and publicly traded, private and publicly traded securities, private or publicly traded securities backed by pools, backed by pools of properties or mortgages, pools of properties or mortgages, pools of properties or mortgages, and limited partnership, and limited partnerships, and limited partnerships. Let's get to the other category. Number 4 is now what we call the commodities. Commodities. What we call the commodities. Write and say. Write and say. This may include the physical commodities, physical commodities, commodities derivatives, commodities derivatives, commodities derivatives, or the equity of commodity producing firms, or the equity of commodity producing funds, equity of commodity producing firms, equity of commodity producing firms, commodity producing firms, which can be used to gain exposure to changes in commodity prices. Which can be used to gain exposure in commodities price, in changes, gain exposure to changes in commodities prices, to gain exposure to changes in commodity prices, to changes in commodity prices. Changes in commodity prices. Changes in commodity prices. Another one you can talk of number 5, that is the infrastructure. Another one you can talk of the infrastructure. The infrastructure. Infrastructure. On the infrastructure, you can just say, on the infrastructure, you can just say, this refers to long-lived assets. This refers to long-lived assets that provide public services, that provides public services, that provides public services, that provide public services. Can add and say, this includes economic infrastructure assets such as the roads, airports, economic infrastructure assets such as the roads, airports, and the utility grids such as airport, the roads, airport, and the utility grids. And a social infrastructure assets such as schools and hospitals, That is also another category of alternative investment. Last one, you can write the others. Last one, we can talk about the others. And you say, the others, you can say, this category includes investment in tangible assets. This category includes investment in tangible assets such as the fine wines, investment in tangible assets such as the fine wines. You can talk about the stamps, the automobiles, can also talk of the attic, or let me just talk of them as unique furnitures, and art, etc. So those are the investment of the tangible assets. This one can also include what we call the intangible assets. And the intangible asset here, we can talk of now the patents. Tangible assets here, we can talk about the patents. Now, let's now talk of the types of investment structure. Is one of the common question in alternative investment. It was there in the sitting of August 2024. This should be question number 1, Roman 3. 1C, I think. Should be that 1B, not 1C. 1B. Where you are to talk about the 3 types of investment structures, the alternative investment structures, or types of alternative investment structures. Now there are 6 of them. 6 of them. So is what I want to talk about. And I will also be able to know out of the investment stratas, where each category of investment here may be able to underlie, or it may be or part of which category or which investment structure. So we begin with the number one. So what we call the regulatory structure. Regulatory structure. Regulatory structure. As we say that majorly for alternative investment, they have less regulations as compared to what we call the traditional investments. So here we'll just be talking about the role of government to the regulation and what we call the taxation, which in this case, it may influence the nature of the investment. For example, here, when we talk about the hedge funds, the hedge funds here, they are less regulated, and they are typically must be formed in a particular way that may avoid higher levels of regulation. That is in the case of the hedge funds. When we talk about the taxation part of it, there are features of government that can motivate the existence of some of investment products and that may play a major role in transforming in the transformation of the underlying asset cash flows in that particular investment products. So here in regulatory, it is generally on those two things, the regulation and taxation. And this is majorly a government role. So you write and say, this refers to the role of government. This refers to the role of government, both regulation and taxation, both regulation and taxation, in influencing the nature of an investment. See, for example, hedge funds are often less regulated, and typically must be formed in particular ways. To avoid high levels of regulation. Must be formed in particular ways to avoid high levels of regulation. Right, and say taxation is another important feature. Of government influence, government influence that can motivate the existence of some investment products that can motivate the existence of some investment products existence of some investment products, existence of some investment products, and it plays a major role in the transformation of underlying asset cash flows, and it plays a major role in transformation, and it plays a major role in the transformation of underlying asset cash flows into investment products. Transformation of underlying asset cash flows into investment products, into investment products. So that is on what we call the regulatory structure. And majorly here, there are those that are often less regulated, like the hedge funds. Now, let's talk of the second, the securities structure. Number two, the securities structure. Right, and say this refers to structuring of cash flows. This refers to structuring of cash flows through leverage and securitization. Through leverage and securitization. Now, what do you mean when you talk about securitization? Securitization is generally a process of transforming the asset ownership into a tradable unit. So asset ownership in such a way that you can be able to sell it is what we call the securitization. So as I've been able to say, you are structuring cash flows through what we call the leverage and securitization. And you can just define this one. Just say, securitization is a process of transforming asset ownership. Securitization is the process of transforming asset ownership. Process of transforming asset ownership into tradable units. To tradable units. And you write down there and you say that cash flows may be securitized. 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 Securitized. Simply on pass-through basis. Simply on pass-through basis. Now, pass-through basis, we generally talking about on a pro rata or pari passu basis. Pro rata or pari passu basis. So you also write down there and you say, the use of securities and security structuring, the use of securities and security structuring, use of securities and security structuring, the use of securities and security structuring transforms asset ownership in potentially distinct in security structuring transforms asset ownership into potentially distinct and diverse and to potentially distinct and diverse tradable investment opportunities. Distinct and diverse tradable investment opportunities. Tradable investment opportunities. So that is on the securities structure. Number 3 is what we call the trading structure. Number 3, the trading structure. Trading structure. Trading structure. Trading structure. Trading structure. Right, and say this refers to the role of an investment vehicle investment managers. Refers to the role of investment vehicle investment managers, investment vehicle investment managers, role of investment vehicle investment managers in developing and implementing trading strategies, in developing and implementing trading strategies, developing and implementing trading strategies, trading strategies. Right, and say it may use a buy and hold management strategy. May use buy and hold. May use buy and hold management strategy. Buy and hold management strategy, which will have a minor influence on underlying investment returns, which will have a minor influence on underlying investment returns, while an aggressive, complex, sorry, you write and say or aggressive. That is I'm talking about the trading strategies that we can use. Can use the buy and hold management strategy. Or number 2, you can use the second one I'm talking of, the aggressive complex. Aggressive complex. Fast-paced. Aggressive, complex, fast-paced trading strategy. Which causes the ultimate cash flows, differ markedly from cash flows of the underlying assets. Differ markedly from cash flows of underlying assets. Differ markedly from cash flows of underlying assets. Number 4, and talk of the compensation structure. Compensation structure. Compensation structure. Compensation structure. Compensation structure. Now you write and say this refers to the ways that organizational issues organizational issues, especially compensation schemes, especially compensation schemes, especially compensation schemes, especially compensation schemes, especially compensation schemes may influence particular investments, may influence particular investment. Right, and say, in the case of hedge funds, compensation would include the financial arrangements. Case of hedge funds, compensation will include or would include the financial arrangements contained in the limited partnerships. Financial arrangements contained in the limited partnership formed by the investors, and the entity used to fund by managers, Right, and say such arrangements usually determine the exposure of funds investments. Usually determine the exposure of fund investment managers. Usually determine the exposure of fund investment managers to the financial risk of the investment. To the financial risk of the investment. Financial risk of the investment. Financial risk of the investments, comma, the fee structure used to compensate and reward managers. Fee structure used to finance and compensate managers. Fee structure used to finance and reward the managers, and potential conflicts of interest between parties, and the potential conflict of interest between parties, and potential conflict of interest between parties. Now, this is what I also want you to know. that when we talk of compensation structure within the investment, especially this alternative investment, may have what we call the implication for the agency cost generated by owner-manager relationship. It will have that implication. I think it's something that you can also be able to note. Just note this. See, compensation structure within investment, especially alternative investment, compensation structure within investment, especially alternative investment, may have implication for agency costs generated, may have implication for the agency costs generated by owner-manager relationship, owner-manager relationship, owner-manager relationship, owner-manager relationship, owner-manager relationship. Last one, number 5. Last one, number 5, is what we call the institutional structure. The institutional structure. Institutional. Institutional structure. Institutional structure. Institutional structure. Right, and say this refers to the financial markets and financial institution, financial markets and financial institutions, financial markets and financial institutions related to a particular investment, related to a particular investment, such as whether the investment is publicly traded, such as whether the investment is publicly traded, such as whether the investment are publicly traded, such as whether the investment are publicly traded. Can also add and say public trading or listing of a security. Public trading or listing of a security is the essential driver of an investment nature. Public trading or listing of a security is an essential driver of an investment nature. Right, and say other institutional structures can determine whether other institutional structures can determine whether an investment is regularly traded, comma, is held by an individual or at retail level, is held by an individual at retail level, comma, held by an individual at retail level, comma, or tends to be traded and held by large financial institutions, or tends to be traded and held by large financial institutions such as pension funds and foundations, such as pension funds and foundations, such as pension funds and foundations. So that is on the types of in alternative investment structures. So as now from our next class, we'll be talking about now the investment structures here and 4 alternative investment types, strata, and here we'll just talk about 4 alternative investment types. Strata and 4 alternative investment types. Now, for this one, it will be you will find it a major difficult to find a major investment that is not influenced or shaped by at least some of the small ways of each of the 5 primary investment strata. But many investment tend to mostly be heavily influenced by either of these 5 alternative investment strata. Not all of them. Like for example, we'll be talking about the real estates, where on the real estate, you mainly it is influenced by what we call the security strata and so forth. That is one of the things that we'll be able to talk about. Then from there, we'll now be able to talk about the distinction between the alternative investment and traditional investment, and that will be in relation to what we call the return characteristics. We'll also talk about it on the method of analysis, and then the last part will be on other factors. And after that, we'll cover the first topic. Then we get to the second topic on what we call the environment of alternative investment. So anyone who might be having any question before we end our class at that point? Any question? Anyone with a question? Any question? If no question, then we will proceed from there in our next class. We talk about the structure and 4 alternative investment types or categories. So thank you. You have a good day. Let's proceed from there.